This is the Resilient Advisor Note for the week of January 4th, 2021. My name is Jay Coulter, and this is a new concept. Each week, I'm going to bring you some of the best ideas from the Resilient Advisor show, plus research that I found in the industry, and I'm going to condense it down for you. That way, you don't have to spend as much time flushing through information in the marketplace, and we can get right to the point. So I'm going to start with an interview that I had last month with Michael Gayad, publisher of the Lead Lag Report. Always an interesting interview, and he had a couple of really good thoughts. First, on gold and Bitcoin in a portfolio. You ready? This is through the lens of what financial advisors and portfolio managers should be thinking about as we head into next year. All right. Contrast your thoughts on gold and Bitcoin as an allocation in a diversified portfolio.
I think both fit because the correlation is low and because you don't have any other diversifiers beyond stocks and bonds like you used to.
It's a reoccurring theme on this show. And it has been a reoccurring theme. In fact, I have a whole series on crypto assets on the YouTube channel with some great thought leaders if you want to go deeper. I encourage you, even if you're in a wirehouse, take the time to learn about crypto and Bitcoin, even if you're not recommending it, because your clients are asking about it. Next, Michael and I had a conversation about something that I've really struggled getting advisors to embrace as they build out their models. The biggest thing I see in advisors' portfolios is they miss out on allocations to the international space. Now, I don't blame them. It hasn't really helped their portfolio for the past 2 decades. What should advisors be thinking about today as we head into 2021 as it relates to allocations to international versus domestic?
I don't think advisors recognize how much concentration risk they are taking if they don't have international, because most advisors, correctly so, have been largely overweight U.S. equities, which probably means they're largely overweight large caps, which probably means they're largely overweight 5 stocks. Right. So I'd actually argue that the only way to try to counter that in a market capitalization driven world where the U.S. has been the only game in town, the only way to diversify is to go into those areas which did not do anything, which are the international plays. And listen, especially with emerging markets, it's been a long time since we've seen a cycle that favored them. I've been wrong many, many times thinking that finally the time would come for emerging markets to run. If commodities do run, if you see kind of global infrastructure spending, if you see the dollar continue to weaken and reflationary hope persist, emerging markets could finally move. And especially under a Biden presidency, you remove some of these tariffs, you're going to start seeing some new highs there.
Speaking of emerging markets, as part of the Resilient Advisor Note, I'm going to try to bring you some research ideas as it relates to ETFs and individual stocks as you think about your portfolio construction. Next week, we're going to take a look at some of the ETFs that are focused on China. I find that most advisors are not looking at that space, and there appear to be some really good opportunities. Turning to Europe, 2 weeks ago, Lenore Hawkins, the chief macroeconomist at Tematica Research, came on, and she has a very unique perspective. She has homes in San Diego, Ireland, and Italy. She was in Italy during the first lockdown. She's there for the second one now, and she tells us what life is like in Italy today.
Well, I think Europe is, again, just like we were in the spring, ahead of the U.S. So welcome to the fun that you're going to be having here. I mean, it's getting pretty bad in the U.S., but it's definitely looking like it'll get worse. So here, what we're experiencing, and I think you won't have quite this much because the U.S. is taking more of a hands-off approach. Trying to get back to the States, for example, flights constantly canceled. You have to rebook. Just the other day, they've just canceled all train service between Switzerland and Italy because each nation has kind of developed its own way of dealing with things. And Italy is getting really tight on how you can get on public transport. You have to check everyone, and Switzerland just can't keep up. So they've blocked now all trains, which is actually very challenging economically because a ton of people live in Italy and work in Switzerland or vice versa. But mostly there's a lot in Italy that go to Switzerland every day to work. And now that's going to get a whole lot more complicated. Borders have just gotten so much more complicated with this whole thing. The nice thing, though, is we're seeing in Europe, because Europe did lock down to varying degrees, but did lock down well before the US with an eye towards Christmas. They're going to try to lighten up a little bit on us in the weeks before, like week and a half before Christmas, and then tighten a lot right around Christmas.
Lenora should be on again later this month, but on Friday, her partner Chris Versace will be on the show to talk about stocks heading into CES. Last month, Samantha Russell also came on the show, and if you're not following her on social media, you're missing an opportunity to learn from one of the best marketers in the business. I personally have not done many webinars at all, none for the Resilient Advisor brand, a few to help some advisors. She talked about why you should be looking at webinars as a financial advisor.
So it's sort of like asking, especially now in our post-COVID world, why would you do events? 5 or 10 years ago, if people would say you should do events and you'd say, why? It's the same mindset. It's a very low-hanging fruit way to get people exposed to you, to the value proposition you can offer, to your expertise. They don't feel like it's going to be a sales pitch. They don't have to sit across from you at a table and feel put on the spot about, do you want to work with me? Do you want to sign these papers right now? It's a way for them to come and to learn and to not feel like they have to make a decision. They're not going to be put on the spot. So we like that as human beings. We don't want to have to deal with another sales pitch, right? So the great thing about webinars, though, versus live events is that there's so many aspects that make them more useful of your time because you can repurpose them in so many different ways.
If you are interested in jump-starting your digital presence in 2021, check out the full interview with Samantha Russell on the YouTube site. Lastly, I've got an ETF to spotlight. Over the weekend, Seeking Alpha, Charles Brolin wrote an article on the Seeking Alpha platform talking about DIVO, symbol DIVO. It's the Amplify CWP Enhanced Dividend Income ETF. This particular ETF seeks 4 to 7% appreciation. It's got a great beta of 0.78 versus the market. And as their president, Kevin Simpson, and I discussed on an interview last quarter, it's really got great characteristics when compared to DIA, the Dow Jones ETF. When Kevin came on the show, we talked about some of the benefits of allocating to covered call strategies inside of an ETF. Well, Kevin, given that advisors are struggling to find that income for their clients, why is right now, and we're recording this at the end of September 2020, a good time to look at covered call strategies?
Well, I always think that it's a good time to look at covered call strategies, but the truth is that there are instances in which it's a heck of a lot better. And from the standpoint of a client perspective, especially if you're retired or close to retirement, or if you're a financial advisor that focuses on retirees, a near zero interest rate environment and a near zero interest rate environment for the foreseeable future, as Federal Reserve Chairman Powell said, we've got 3, 4, 5 years of this. How do we get income for clients? And more importantly, how do we get appreciating income, which is a whole nother topic.
To see the full interview with Kevin Simpson, please visit resilientadvisor.com or check out our YouTube channel. Lastly, this week we've got a full slate of guests. On Wednesday, Tyrone Ross is going to come on for another edition of our Crypto Office Hours. Interestingly, I ran a survey on Twitter, or a poll, to see when people would be interested in selling their cryptocurrency. To timestamp this, we're at the beginning of 2021. Over the break, crypto, Bitcoin in particular, ran up to 34,000. So here was the question that I posed to my Twitter audience. Would you sell your allocation at 50,000, 75,000, 100,000, or not at all in 2021? And as you can see, people are not interested in selling their crypto. What that means for the rest of the year, maybe Tyrone could put some color on. Thursday, Chris Wynn, the founder and CEO of Advisor Assist, experts in compliance. He's going to come on and talk about what these new changes to the marketing rules mean for financial advisors. And on Friday, my regular guest and friend, Chris Versace, is coming on, and we're going to talk about thematic stock ideas heading into the Consumer Electronics Show, which will be happening the following week. I appreciate you tuning in to this episode of the Resilient Advisor Note. Hope to see you next time.